So much of the rally in the S&P 500 this year has been focused on technology, whether it's large cap, mid cap, but looking at other ways to play this tech rally. Jay, you have two new ways that you've been sort of looking for new talk of deployment slowing, power concerns, and so forth when talking about artificial intelligence. How does that trickle through to the ETF universe?
Well, one of the biggest trades we're seeing this year is simply people leaving the traditional tech sector and getting more granular into AI-specific ETFs like BAI from BlackRock. This is an actively managed strategy run by our portfolio manager, Tony Kim, and he's looking across the entire value chain of artificial intelligence stocks. So think about the layer of digital infrastructure from semiconductor manufacturers to data owners to large language model developers to products that are utilizing artificial intelligence. He has a lot of latitude to see where the value is in the artificial intelligence value chain. So this is a big moment, I think, for the industry, because for so long, people like to divide the market by sectors. We're seeing when you have these really powerful but more targeted themes like artificial intelligence, you have to get more granular than just using a sector tool. You have to use really a thematic ETF to capture it.
Speaking of thematic and other ways to play technology, there's crypto, and Bitcoin has done exceptionally well this year, Christian, but there's also more focus these days on stablecoins, tokenization. There was even a report last week that the SEC was examining letting stocks trade on the blockchain. What's your thoughts on this?
Yeah, we think that's coming, and it's going to be very disruptive. It's going to create efficiencies in terms of cost and time for investors. So we think this is going to be a great thing and really bring capital markets into this next century. And we think blockchain is the way to do it. There's a variety of use cases around blockchain, whether that's stable coins for payments, the Genius Act happened this year, or it's tokenization of assets, which could happen with real estate or stocks. We think this is a major theme that's going to impact not only technology, but also fintech and, of course, the crypto community. We have our Block ETF. We've been out since 2018, which is actively managed, buying blockchain and crypto equities. It's averaged 20% a year return since 2018. We're a pioneer in that space. We think the upside is going to continue, especially given the current administration and some of the regulatory moves we're seeing from exchanges as well as large capital market players.
Yeah, this administration has been widely supportive of crypto. Jay, what are your thoughts on the best way to play this?
Well, I think a lot of what you've been saying, the rise of stablecoins, the rise of tokenization, and more enthusiasm around blockchain technologies, that often leads back to Ethereum. So there's a big difference between Ethereum and Bitcoin. Bitcoin is really this global monetary alternative, more similar in vein to the gold story. But Ethereum is really a bet on blockchain technology and other ways to use it through things like stablecoins and tokenization. So this enthusiasm has really trickled through to a lot of interest and flows into our ETH ETF, which is a spot Ethereum ETF, as people want to play this potentially very disruptive theme.
We'll be watching all of it. Jay, Christian, thank you for lending your expertise today. Enjoyed our conversation, and you can catch that and all of our other content at etfedge.cnbc.com. Thank you so much for watching today.